Hey everybody, welcome back to ThinkScript Studies on the Thinkorswim platform. My name is Mike Fairborn. It is good to be back with you all today. Today we're going to be diving a little bit into the past, into a name that you may have known. You guys remember Jesse Livermore? Does that name ring a bell? Well, he had a trading system a long time ago that he used to amass a fortune. Of course, he did end up losing big chunks of that, but he had an interesting way to get into the market. We're going to be diving into one of the classic type of setups and indicators today. We'll have that on the Thinkorswim platform just momentarily as we look at that, among other things. I've got some basic topics to review, as well as some potential trading we want to dive into, into some trade examples with previous ThinkScripts. So I'll look forward to going through that with you all. All right. We are joined in the chat by, who else do we have here? We've got Robert. Hello to you, Robert. We've got Riceberg, David, Life in the Fast Lane, as well as Rocky from PA. Robert Boucher, as well as Chris, Greg, and JD. Folks, get ready to strap in. We've got an interesting presentation today, looking at that original Jesse Livermore pivot, higher low pivot. Fascinating. I'm also joined in the chat by a very good friend of mine, Kevin Horner. You'll see him in the chat as KH. By the way, you can follow Kevin. He's got some great stuff on X. His handle is right there, Kevin Horner CS. Mine is simply just Mike Fairborn CS. Folks, love to have you on board. With that, let's dive into some disclosures so we get going here, though. Equity and index options carry a high level of risk, not suitable for all investors. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper-based software application is for education purposes only. Backtesting results presented are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results. Past performance of any security strategy does not guarantee future results or success. A quick look at some of our futures disclosures right there. We don't dive into the futures trading, but we do reference them from time to time. All right, well, that is it for our disclosures. Let me go ahead and just pull up our regular charts into our regular scheduled program here, and we'll get going. Let me do this right now. I'll pull it up, and we should be good to go. I've got this up and ready. Indeed, we do. Perfect. All right, so let's pull this up right now, and we'll get this set up. Just looking at the S&P 500 right now, folks, just a couple of quick notes as we dive into this. Now, always be mindful, any particular ThinkScripts you might be looking at, they're going to be bullish, they're going to be bearish, depending upon maybe the general trends of the market. What's interesting here with the market, I have to say, is that we've kind of run up over this period of time, and we are holding this tight range. And folks, what did we have yesterday? What was announced yesterday after what kind of looks like a little bit of a bull flag? Was it bullish news by the Fed or bearish news? How is it, the FOMC, how is that perceived by the market thus far? It's only a couple of days, but folks, there was as you might be well aware, an interest rate cut in the markets. And with that interest rate cut of 25 basis points, puts us back down to the 3.5 to 3.75 range. And that is 3 cuts this year. And all else equal, that could be a positive, especially when I know many of you guys that are very well technically advanced here are also using indications like seasonality that could set us up into the end of the years, maybe a little bit of a drift higher. We'll see about that. But I would say it is interesting if you get on a big market, a big index like the S&P 500, if we're going to get that in place, and in addition, kind of setting up as a bull type flag, possibly maybe trading back up above your 50, potentially at least a shorter term higher high here. There is still resistance right there, just to be mindful of. We still have some overhead resistance, but tying in that rate cut, it could spell an average seasonal move towards the end of the year, which is kind of a drift higher. So just some thoughts there for you guys. All right. Well, I did get a topic request this week. It's pretty straightforward, but I want to make sure everybody has some of the basics out there. This one was just, we'll start off with this before we get into Jesse Livermore stuff, but I promised that I'd look at this, and it's just a real basic kind of indication too of market strength as well, we could say. And that market strength would be tied into Well, let's say a golden cross. The golden cross, the 50 period, we're halfway there, 50 period moving average, and the 200-day moving average. They wanted to know how to build this very, very quickly. I do have a very quick script that I just pieced together. I didn't even have a chance to test it. So let's just, I guess I should just hope that it works, but I'm going to show you how to do it in the Condition Wizard really easy too. But here is just a simple 50 above a 200-day golden cross. Now, let's zoom on over into, let's use a little bit longer term time frames over here. I'm going to go right into SPX over here. We can look at any of these really. Oh, I just lost it because I put it on there. Let me just put it back on real quick. So I'm just adding these in, simple and a simple. I'll just leave some of the colors and sizes in there just for the speed of getting it in. But a 50 crossing above the 200, or is it, you guys, a 50 that's greater than the 200? Could it be both? Could it be crosses above, and could it also be greater than? It could be both. Where do we get that crossover? Well, we got it right there, the 50 above the 200, right? An extended sign, maybe after a little bit more positive movement in the market, do we get that, right? We want to see an indication that the 50 is starting to reestablish itself above the 200 for a bullish type setup. Notice that prices, though, price itself broke above each of these moving averages earlier. They broke above right there, retested the 200 again, but that's the crossover. And sometimes with that crossover, why the golden cross is interesting is because it's this. You get maybe initial break, but if you're going to get the crossover again right there, and then the follow through, what's happening? You may be getting that upward drift. In other words, a higher high and a higher low, which, by the way, is not too far off with what Jesse Livermore was looking at, but that's what we're talking about. So the crossover could be useful. This is, again, the golden cross, 200 above, 50 above the 200. That's the bullish. To the downside, it's this right here. Actually, it was like right at the bottom. That was not a good signal. Long-term trend was still up, but there you have it. That says bearish, but one of the things that you could look at there is, did you get a lower low after the cross? You did not. You actually got a higher low, and you got a higher high right there too. So a couple of things to look at. Let me do this. Just kind of the bare bones. This is what I have right here. Let me just make sure it was going to work, though. This is a ThinkScript. A bare bones, no, that's above the 50. What's that? Okay, so I've got a basic in here. Let me just load that guy up real quick. A basic golden cross. It's just this. Let's look at it right now. You can put this into a ThinkScript. And again, where did I go to put this ThinkScript in? Because this was a basic request. We do get plenty of those coming up. We are in the Scan tab. We are next in the Stock Hacker. I am scanning in the S&P 500. Those are the 1, 2, 3 main points or areas to kind of get aligned with what you want to do. And then over here, we're going to click on our add filter and go to the study. Okay. I better just show it. Because if you haven't seen it before, there you go. Study, you click on study right there, and it will pull up an additional study. And from here, what you can do is you can simply just come in. I'll go to your ThinkScript editor. Let's delete the original Condition Wizard. We're going to do that first. And then go over here and just go into your editor, and you can type in code here. Let me talk about the Condition Wizard in just a second. But this is the basics of it right here. Let me just pull it up. It's just as basic and most bare bones as I could possibly get it. Now, what I did in this case, I just did a fast length and a slow length, the 50 and the 200. And I have defined that fast and slow, which you have to do. And because what are we talking about here? We've got to create that definition of what we're looking at. It's an average of the closing price, the fast length. That's the 50 and the 200. Okay. You might see some of the logic here. The plot equals, the plot scan equals faster is greater than the slow. If I just click on this, I don't think I missed anything there. No, it looks like it's fine. We have actually right now 50 of them that are, 300 out of the 500 stocks. Just list all of them here. Just as an example. So 300 of 300 out of 500 stocks that are above that 50 period, they are actually in a golden cross setup right now. It's the most basic one you can get, but there you go. Okay, so if we were to look at one of these, because we have it on our charts already, what do we have? Well, Agilent is the first one on the list, alphabetically speaking. And do we have a golden cross here? We do. The 50 moved above at this point in time, indicating maybe we have a longer term trend. So, you'd have to say that the majority of companies in the S&P 500 are a little bit more established on the trend as defined by a golden cross, because we've got 300 out of 50 out of 500. If I go back to this, remember I mentioned that you can also adjust this too very quickly. And by the way, change it to whatever you want. Many of you look at shorter term time frames. Some of you will look at longer term time frames as well, right? I mean, whatever ones you want. It could be a 20-40. I've seen that as a short-term golden cross, the 20 crossing above the 40, as a side note. But this just means it's greater than. We could add to this, or we could just simply also say crosses above the slow. What does that imply? It's crossed above. In other words, there's an action being done there, right? There's more to it. It crosses above. And so you're going to be looking at those across above today. SLB, let's just take a look at that. SLB. Wasn't that Schlumberger? It says SLB Limited. They changed their name? They must have changed their name. Used to be Schlumberger. But there you go. Do you see it right there? Interesting too. Look what that might have spotted as it's happening right here and right now. What I'm saying here on the charts, just kind of on the fly here, is as a break above the 38 and possibility of what's that? A higher high and a higher low potentially? Sure. It could also be a measured move coming up. We could look at this range and this range. Excuse me, this range and this range. This is about, what, 6 points or so? Measure that to the upside. Fascinating. Look how it found that right there. Now, there were only 3. So we could look at it different periods of time. 8-month triangle, says Chris. Hey, Chris is looking back a little bit. Definitely a sideways range, Chris. Got you on that. Yeah, it'd be more symmetrical. It would be a symmetrical one too, right, if we were looking at that. But I'm going to flag this for my class, for my swing trading class. This could be an interesting one. It's just starting to get going. Quick look at the weekly here. Wow, maybe a long-term trend line break as well. So whoever did, somebody gave me this topic request. Their name's eluding me right now, but there you go. Quick note on the scripts. They are not guaranteed for timeliness or accuracy. Thank you very much, KH. Mr. Horner in the chat. That's exactly right. Not guaranteed for timeliness or accuracy. As long as the data that's flowing through the platform is good data, then in many cases, yes. It's going to, mathematically, the scripts are designed to unfold with good data, but yeah, they're not guaranteed for timeliness or accuracy for sure. So with this, let's do this too. If you're just starting out, it can be really helpful. Quickly go through this. Let's just build one right now. We can go into our ad filter just like we did before. Remember, we're in Scan and Stock Hacker here. Click. I'll just do this pretty quickly. You guys can, I know many of you know this, so we'll just jump in and we'll add a condition. We're just going to say it's a study, and that study is going to be the 50, but it's a simple moving average. Okay, we can decide what we want to do. First of all, let's change it to a 50 down here. Can't forget that. We want it to be crossing above another moving average. This was another study. So simple, you guys. So basic, So easy to get familiar with the code in doing this. What if I did this? I'm going to say within the last 3 bars. So the crossovers happened not just today like we just ran, but over the last 3 bars. There you go. And what does that look like? Well, that's the condition wizard code right there, ThinkScript editor code, and that would work just fine plugging that. It is right there. So you can see how that works, and we just said within 3 bars, and I could have added that to my original code as well. But if I click on OK, you're going to see more in here because we're looking over a 3-day time frame, and there you go. We've about doubled it. Okay, so that is how this is done. I will go ahead and just share this one with you. Remember, you can do greater than, you can do crosses over where there's more of an action taking place. but wanted to just mention that to you. Again, not guaranteed for timeliness or accuracy, but I will throw that golden cross in. Basic golden cross script, just so you have it. Okay, there we go. Now let's turn on over into Jesse Livermore. Jesse Livermore. Okay, I learned about Jesse Livermore back when I first started trading, and he was just known as a famous trader, right? Very knowledgeable guy. Had been around since I think he was in the 40s, 30s, 40s. Legendary stock trader, though. Made a lot of his money just pioneering day trading. He started off spotting market trends on his little device, his little tape reader. And what he would look at is he would look at basically those scenarios, and I'll just pull something up like on an Apple here. He was, I think, maybe one of the original guys. He could have been the first one that was looking for this concept: higher high and higher low. More of a defined type trend. Would you agree? You're getting a higher high and a higher low, something you'd actually get with a golden cross to a large extent, right? There's higher highs and higher lows. But what he did is he developed just a pattern recognition. And what the pattern recognition, and you can read about what he had looked at and different things, but he said this. He said over a period of bars, didn't list the number, he saw a higher high and a higher low. But then he got more specific. Then he said, though, for the higher low, speaking specifically on bullish trades, he said there was a 3-bar, what he called specifically a 3-bar swing. And that 3-bar swing means that after you got a higher high, all he was looking for was a 3-bar swing that did something like this. It went, I'm going to zoom in now. His 3-bar swing is the following. It's so succinct, and it's so simple, but it's so actually it's so interesting how useful it is. It's kind of like E equals MC squared, right? It's one of those. After you have the high, you got a low, low, there's your 3-bar swing, and then you had a higher low. What made him, I think, so successful is that it was the higher high he was looking at, and then the higher low. In other words, it wasn't one of these, the downward trend, and he wasn't saying, okay, we've got like right in here, we've got a 3-bar low. No, there's a trend coming down. It's a fascinating way how he set this up, but that would give us a bar right there. Okay, is a 3-bar down. He also said he wouldn't look for these signals until after a period of time. What that was, we don't know. But I just said 10 bars, which made the most sense to me. So in other words, if you got a signal here, you wouldn't necessarily get like another signal until at least 10 bars later. Now, I put this in the script where we can kind of adjust this a little bit too. But I want to go ahead and pull that up so you guys can take a look at it. Let's clear this off as well with other indicators. I added the 50-period moving average in too. I kind of modernized it a little bit. He never talked about a 50-period moving average, but I just said everything has got to happen above a 50-period moving average. Okay. So let's pull it up. It's again, I've just added this in here. There it is. The Jesse Livermore high-low pivots. Okay. And this is it. This is the script. There are some similarities, but it is unique. We've not done anything like that, exactly like this. There's been some similarities, but let's pull it up and I'll just show you what it is. We can make these bars a little bit bigger if we wanted to. This is what it's looking at. There was a higher high, but it also, I put this in here because it's hard to define exactly what he meant, especially if you're not reading the tape consistently, as Jesse Livermore was. But you're getting at least a 3-bar pullback and then a higher low. Okay, now that did dip, right? And it did make a new low over here, so it didn't signal. But when you can make a new high, and then you finally start to just make a higher low right there, he's using lows. He said lows were the key. And not just lows being the key, but the higher low being the key after ... you've got a higher high. all I've simply done in here too is add in, like I said, above the 50 period moving average. Take a look at it. There's also going to be 10 bars in between here and here. Notice the next one right there. Right there. So simple, but really, really cool to be having on your chart just to see what he considered to be the most powerful entry points. You know, as I look more and more into Jesse Livermore, there is a candlestick pattern that you guys I've talked about. You might have heard me say it. It was in the very first candlestick book, the very first technical analysis book I read, and it was the three soldiers down. And what it is, there's three soldiers up as well, but it's basically three red bars down. Notice the higher low right there. Something about the higher low that happened the prior day. We jumped up from that higher low. So there's a form of a little bit more confirmation. You don't get a ton of these, which is just fine by me. You don't get a ton of these entries. Where's the next one we see? Right over there. Okay, still above the 50. Where's the next one we see? Right there. Now, did it move up yet? No, it was a higher low, and the higher low comes before, let's say, for example, a hold and everything. Fascinating. I haven't looked at it. What about you guys? Have you seen this? It's in the book, and so it just took a little while to sort of dissect exactly what he was looking for, what he was doing. Let's pull it up on the market here as well. Show you where you guys can adjust here too. I know many of you guys do different sort of indications on the chart, but here you go. Ooh, that one just barely slipped under the 50. Notice over here, 50 period, you're not getting anything below the 50 over here. No signs, even though you might have gotten something here. And his original system might have blocked some of it out, but it didn't block all of it out. So all I've simply done is just modernize it for you guys a little bit. Got to be above the 50 when you get the signal. Let's look at it. There's your first one. And I can tell you exactly what higher high it was looking above right there. It was above this high, and there you go. Pull back again, 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 again. Getting a lot of these little dips, right? But if we zoom in, you'll see where it's coming in at. It's coming in right there. After the high, it's got to be a higher low. We don't get this bar. We don't get it until it gets there. It has to, the day has to finish and have a higher low. So in other words, you're not going to get the signal unless there's a higher low on the day. Yeah, it is pretty cool. Like I said, you guys, it's simply like an E equals MC squared type of setup using just basic stuff. This is all about price action. There's nothing else. There's no other indicators except for price. And remember, a lot of the indicators that we look at are just derivatives of price. I mean, the vast majority. If I pull this up, scroll through here, you guys, I mean, my gosh, we're talking, I don't know. I'll venture to guess 90% of those are derivatives of price, or they come after price. This is price itself. So that's on the market. So some really interesting entries. I think a cool one just to have, kind of in your back pocket to throw out here, have it on the charts. You can change up here too on the script itself. So what this represents, I've made it as simple and as basic and as easy to understand. I had to define the minimum bars in between the bullish pivots. Why is that helpful? What's going on over here with this code? Now, I referenced this code a little bit down here. I've used some of my old methods previously to build this, but specifically what's happening here is if prices were going up and we got a signal right there, and then we go over here and it does it right there, breaks up. You know what we're getting? We're going to get a chart filled with green dots. Tons and tons of green dots. And I don't know about you, I don't like it when I'm getting signals every little bit because I can't really distinguish between a main signal. In fact, if this was all happening, let's say if 10 bars was here to here, let's say it's here to here, and we had one more of these guys come back, or even just, I'll make it ridiculous. It comes back 3 days, and right there again, we would have 4 signals right there, which is just crazy. You're going, what's going on? Listen, your main signal is right there. So Jesse Livermore himself said there's got to be a distance between the two higher lows. Didn't state what it was. So I just simply used 10 bars, and that is equivalent to 2 weeks. Think about a swing trade time frame, which I teach in my class on Tuesdays, right? A lot of it, folks, a lot of it, I say 3 to 15 days. Oh, in some cases, like, but, really looking a lot of times it's, 8 to 10 days is a swing trade. You might see a lot happening in there. It might be 8 to 11 or 12, whatever. But giving it a little bit of time so you're not getting an overload on those symbols. What you can simply do in here is change this if you want those dots to change differently. If you want it quicker, do a 5. Over here, on our moving average length, try to make it really straightforward. There you go as well. This is our 3-bar swing. This is really kind of the heart. Obviously, though, this is Jesse Livermore. I would say that he would definitely look at something like that, too, for the higher low. But to hit a few of these, the 3-bar swing pivot, as you can see, going back 3 bars, 2 bars, going back to the last bar, the current bar, and then bounces above the 0 bar. And what is that? It's the low. So I've put everything in here as lows. That is really the Jesse Livermore code. But these others he mentioned too. They're key components of it. But that's him reading his ticker tape in modern coding. Let's go ahead and just share this with you. So this is the Jesse Livermore, Jesse L. Chart. Scan. A chart scan. No, it's not a scan. Chart data chart indicator. Got the scan coming up next. There you go. Okay, let's go into the scan and see what's moving in the market. It's always nice when you can tap into the capabilities of the platform, right? Get that going. I'll clear this guy out. I'll dive into this right now. It should be under my JLs, not like last week, right? Had to look and find it. There you have it right there. So this is the scan. Again, scan tab, stock hacker, S&P 500. What do we got going today? Wow, crazy. Today we have this indication. I don't even have it looking back over a time frame. I've meant it to be very quick, so you're getting the signal right now. These pullbacks can be so fast, I think you have to jump. I mean, you have to be aware of them very, very quickly, folks. Let's take a look at some of these. ADI. So this should, just putting the plot as a scan now, we should be able to pull this data up. ADI, here we go. Boom, boom, baby, there it is. Here's your first one right there, coming up. Oh, there's a high above the 50-period moving average. Did you get above it? Did you get a higher low right there? Bam, it's going to signal that off. So you're going to get the Jesse Livermore signal right there. In addition, where else do you get it? Well, you got it here, and that could have been a rally to the upside, but guess what it did? Broke down. It broke down. Nothing's perfect in the market. Even if you're looking at a higher high and a higher low, we broke down there. We did. And the thing is we continued to get what? Whipsawed around the 50-period moving average, and so we got no signals through here. Nothing. No higher highs necessarily being made. In fact, there were lower highs being made. Well, the code caught that, kept it out. Next one, though, right there. Did we get, I'm going to zoom in on that. Looked like a 2-day. Nope, it's right. It's a 3-day. Do you see it? 3-day. That's a higher low right there. But then you get a lower. Remember, you've got to get at least the 3-bar swing after you're getting in a higher high range. That's his line, actually. 3-bar swing. Bam, right there. Out of the gates. And we'll see if it does go up. That's the thing. But it did move up on a pretty big bar there. When I mean out of the gates, I mean it's out of the 3-bar swing gates. Doesn't mean it's going to go higher, but it does have a higher high and higher low in there. So EMR, Emerson. Okay. Cool. We just got this signal going off here. Ooh, fascinating too, because do you guys see the longer term? It almost looks to me like a sort of a longer term weekly flag pattern, but I don't know about you guys. We finally got above the 50. Kept us out of this choppiness. Ah, and this is funny because just imagine Jesse Livermore in the 20s or 1920s, 1930s, just saying, "Yeah, it's just choppy. It's just choppy. I'm not. It's not." In one of his, his that he's recorded, he just says, "I kind of stay out of the market when it's just kind of like meandering or whatever." But now you got it, and I think it's a higher low, but like I said, I've modernized it with the 50 period moving average right there too. 50 period can be an interesting distinguishing portion. Notice it's even like on this downward move, takes a little bit longer. But you guys, before you signal, kind of reminds me of the Golden Cross, sort of. I didn't get that modern. I just went to a 50 moving average. Let's go ahead and share this too in the scan. Love to hear what you guys think about it. Yeah, as I share this scan too, you guys, if you guys find that like this kind of content is useful, definitely consider smashing the like button and sharing it with some friends as well that you might find that would be interested in this type of stuff too. Here is the JL scan. And remember, not guaranteed for timeless accuracy, but what I will do is I will put this in the link at the bottom, and I've got to point out where that's at. I've had a few people not finding that. And so let me just highlight where it's going to be at. By the way, yeah, if you'd like the video, and then definitely consider subscribing to our channel. Would love to have you guys on board. This is just our live stuff. You can see some great stuff in here too by Kevin Horner. He does so many great things in our morning classes. That's no doubt. Gets us set off straight on the day. And by the way, after the close too. There you go. He's morning and evening. All right, here is, I was just going to show you a few different things here. But yeah, if you come in here too, you can go into, let's see, that was the options. Let me see. I think script should just be at the bottom. This one right here. This one got posted a little bit later. I've got to show you something too. I was going to bring it up too in this class, but let's go down and just view this playlist here. For this particular class, it got posted a little bit late last week. We were using candles as well. I've got to show you this, but anyways, if you guys want to come in here, we have access to a lot of different. If somebody you could share with them our channels here, if that's the case, whatever the case might be. But this is just the ThinkScript playlist. Playlists. There we go. Put it right there. Now, if I look at this class though, real quick from last week, what I'm going to do, I'm just going to scoot down here and just show you where I post these at, you guys. It's right down here under more. If you guys are viewing this post our class here, you're viewing the recording, I put them down below. Gotta click on more. Under the description field, you'll just see them listed right there. Those are the scripts, okay? They have to go through a process of being compliance ready, but I just want to show you so you can find them, but that's where they're at. By the way, last week too, we did the bear flag with the Kablode. Kabalolo. It's actually H there. Close below the low of the high day. Anyhow, I've got to change that, but there you go. This is like the bear flag with the initial, maybe, some people would call it like a trigger, the close below the low, the high day. Anyways, that's listed there. For this particular class, I do need to highlight this to you guys. Okay, so this was the bear flag. Sorry, just typing this in real quick. Bear flag and the cup and handle indication. There was one thing we didn't get posted last week. I got to show this to you. So if you guys want to check this out, this will make a lot more sense now. I talk about it more in the class, but if you come over here, and we'll go ahead and just load that up under the scan tab right now. And we'll go to our load. Remember, I had this right at the very bottom. There we go. Weekly bullish outside reversal right there. One of the things that's so critical, I did save it, but you got to make sure if you have this up, folks, this was a weekly candlestick that helped us find that cup and handle last week. The periodicity over here has to be weekly as well. That's got to be W. Okay, the default on that, and I tried to save it so it worked correctly. The default's day. That's not going to give you the list. The weekly will show you the way it's designed to point this bullish outside key reversal, which is a candlestick, which mirrors itself as kind of a daily cup and handle pattern, short term. Let's just run it right now and see what we got. We actually got 23 of these guys popping up. Oh, Colgate's in there. Okay, DHR is as well. TJX, really? Just want to pull this up because this is another one. Oh, okay. It's short term, but it was this strike right here. Cup and handle. Could have been over here as well. DHR. Let me see if I got another one. Yeah. It was the cup and handle. And I've got actually the yeah. Well, you'll see it if you go through the presentation, but that's your cup and handle right there. Do you see it? That's something else. I don't think Jesse Livermore was seeing a cup and handle, but anyways, sometimes you get the cup and handle within here, but it is a weekly candlestick that's finding it. And by the way, I'm on a daily chart. A lot easier to see if I actually go to the weekly, just like everything else. Do you see the candle? Do you see it now? A little bit easier. Maybe a candlestick over here. Oh, well, there was Clorox in it. I want to see Clorox. Oh, pulling back a little bit though, but was, we don't know, the cup and handle right there. Got a long handle to it, but that was the cup and handle. I just saw so many that were so interesting. But anyhow, that's that class. If you're interested in checking that out. You know, you guys, as I looked at this, one of the things that I want to do, and we're going to have to do this going forward, is we want to look at a number of different potential trades each week that are coming up with a lot of the different think scripts that we've discussed, because I think it's so critically important to make sure that we're maybe utilizing these codes. We've got so many in here, as I've mentioned to you, and we've introduced so many from one week to the next, right? As we've gone through. I mean, look at all these guys. There's just tons of them. In fact, I'll just go back here and just show you this. We got so many different, turtle trading, the turtle code that they were using, and some others, and then Brent, filled in for some classes. But I mean, there's just so many to use. But if we just keep doing them different every week, are we really taking advantage of what might be presenting itself in the market as ways that traders might look at potential, paper trades, etc.? So I think that is going to play a key role in the new year for us going ahead, because we want to make sure we take advantage of these. I mean, for example, this Cahold pattern, the flag plus the close above the high, the low day, there could be very, very interesting sort of trades that come up each and every week with very fascinating Cahold patterns, right? Could that also be referenced with an earlier signal from our class today? Yes. Turtle traders. Interesting. Remember how we talked about this could affect some sort of like a lot of the commodity type stocks out there? Are there going to be times in the market when commodities are really outpacing or showing strength? Absolutely, they could. This Elder X-ray was interesting, a potential reversal. They all happen at different times. Down here, Brent's discussing this implied volatility script. So I just didn't want to limit it, to what we've got here. Each and every week, just throwing out something new and something new and something new, where there might be opportunities in the market that traders might potentially see and want to tap into. All right. Speaking of potential opportunities in the market, over here, I'd be remiss, folks, if I did not mention tonight is, just said, please join us for the 7 p.m. Eastern Time Schwab Coaching 2026 Market Outlook. Now, these are generally recorded, though, but just as a side note. But if you can't, if you absolutely can't make it, but I did put it in here, and if you click on it, you can go into this and, well, you can watch that. Those are always great, just giving you insights as to maybe what they're expecting during the year. If you wanted to link to that to get into it quickly, I'll put it down here for you in the chat, and there you have it. That's just, be sure and follow Kevin Horner, CS. Kevin just typed it in perfectly. Yeah, Kevin Horner, CS, Mike Fairboard, CS. Kevin's, I'm sure he's got it posted as well. But you know what? Yeah, that's right, Gerald. Yeah, it was William O'Neill that did make that famous, the cup and handle. You're absolutely right. That's where that came from. And that's the first time I read it, was from William O'Neill. Bill O'Neill or whatever. Yep. Okay. But that's, you guys, hey, we've got to be thinking about what we're going to be doing going forward. In fact, let's just stop right now. We've got a couple minutes left. I'm going to go over, and what we want to do is I'm going to pull this back up, and I'm going to go right in to our turtles. And by the way, many of these codes are also in the Market Watch tab too, right there, that we've had in here. I've been looking at like earnings beats. You're going to find that in there, companies that beat their earnings by percentage beats. So we've tapped into some fundamentals in here. We've tapped into companies with dividends, dividend yields on the high side relative to the last several years, whatever the case might be. There's some really cool stuff we've done that you'll find in this list. But, there could be some limitations as to how far we can go, because after you go so far, you got to start trading it, and we start looking at it as well, just seeing what opportunities could be out there. Anyhow, let's do this. That's enough talking. I'm going to go and start scanning. So I'm going to go over here into our Turtle Trader. There it is. Sticks out like a sore thumb. The Turtle Trader. I'll share this with you guys as well too. But yeah, that, like I showed you, that's a recent one that we did as well. And here you go. We've got 99 companies out of the 500 that's got that. And by the way, I have within that class an indicator too to show that, and highlight it for you as well, when stocks have specifically gone above a 20 period time frame. Now, any of these could be signals that we could be looking at, but this could be one as well. Let's just take a look at Adobe. Really? Adobe's been down for a long time. I'm just curious. Doesn't mean it's going to go up. I'm just saying that's interesting because it's done something as of late, and you can see it's up today. The percent change is up today. So let's just take a look at good old Adobe and see what we've got. Okay. Interesting. Maybe one of the first times in a while that we've seen it even break above high. Now, it's not going to give us anything on the Livermore system, on the X-ray system, or anything else, but it is saying that we're breaking above a 20-day high range. And so this is going to be like the earliest of early signs, right? Now, if you're looking for the powerful signals, the one we discussed today with the Jesse Livermore 3-day swing on a higher low, that's a mouthful. But that's the one that he was playing. That'd be cool for you guys to take a look into Jesse Livermore too. Fascinating individual. But this is an early one. So be mindful of these, and we'll kind of go from there. But what I want to do before we're done, remember that EMR we looked at? What we'll do here, just as an example trade, I want to just end with a quick trade here on this. I'm going to do this. If we break above this high, I might add to the position. But for now, let's just put on 25 shares as an example of trading these and just see how it goes. Maybe it starts to move from here. I can add more to it if it breaks up higher, but just real quickly, here's our 25. What we can do is monitor this into next week, and I'll have a specific ThinkScript set of trades here for us on these. That was only 25 shares. It's a $139 stock, but we're doing some example trades on it to track these as well. All right, folks, hopefully you found that informative, useful. Again, remember, smash that like button. If you found this informative, useful, subscribe to our channel, share this content with somebody that you might find like-minded as yourself, maybe a friend that also does this kind of stuff. You guys can work together. Whatever the case is, be sure to follow Kevin Horner on X, Kevin Horner CS, Mike Fairborn CS. Everybody have a fantastic rest of the day, and we'll see you next time.